Alright guys, I want to quickly share my trade insight on NZDJPY. So this is NZDJPY daily time frame. Alright. So if you can look at this clearly, you'll see that we're having a double top here. Alright. This is a double top. Let me remove this so that you see clearly. And this too. This is a double top. Alright. And in an uptrend, the market makes series of higher lows and higher highs. So that was the essence of me drawing this trend line. Now let's talk about this resistance that I just clearly marked out here. Let's see it on weekly time frame. Okay, so on weekly time frame you can see that this zone has been tested before as a resistance, and as a support somewhere around there. Now we are coming back to that zone. All right, so meaning that this is a critical zone that we need to pay close attention to. Let's go back to daily time frame. So there are a lot of things to consider here, because when you look at this is a round bottom, and if this should have been in a downtrend, of course you see it as a bullish move, but for it to be in an uptrend, to me I see it as a reversal, because it's a clear double top. So here are my reasons. This candle shooting above this zone simply means liquidity grab. It means some stop losses we have been cleared out. All right, and you can see this rejection on this candle, so meaning reversal is imminent. So let's scale down to 4-hour time frame so that you see this clearly. Now the essence of this trend line I drew on the daily time frame is to serve as a point where I will be expecting price to either bounce off from or break down or break out from. So either of the two that happens first, I'll still be trading it alongside the trend. So let's scale down to 4-hour time frame. Now you can see that this is a crucial zone. That was why I marked it out as a dotted line. This is going to serve as my take profits as we progress in this analysis. So on the 4-hour time frame, you can clearly see that this is a bearish engulfing. All right, you can see this bear candle, I mean the blue candle, the green candle, sorry, that is engulfed by this red candle. This is a bearish engulfing. Now normally I expect price to come back and test this zone before continuing on its direction downwards. Now you don't just jump into this trade from this point. You have to wait for a retest of this zone before you enter your position. All right, so let's see if we can get that confirmation from our daily time, from our 1-hour time frame. So this, the 1-hour time frame, of course, is still a bit sketchy, and I can't really see anything clearly here, though I can see, but not as clear as I want it to be. So that means we're going to scale more down to 15 minutes time frame. So I usually go one time frame away from my from my zone. All right, so clearly I saw the movement on 4-hour time frame. I went down to 1 hour to get my confirmation or my entry. I didn't see it there, so I had to go over to 15 minutes time frame. So that is why we are here in 15 minutes time frame. And in 15 minutes time frame, I can clearly see a mitigation block. So look at what I'm seeing here. Price moved up, made a high here, retraced back to this, pulled back to this zone. Now the price failed to make another high, thereby making a lower high. All right, and now price moved downwards again. The usual thing is for price to come back and test this change of character that occurred here. So price is here to do that, meaning price is likely to do that in the future, and that is going to be our entry. So what am I expecting? I'm expecting price to come back and test this change of character or break of structure somewhere around there. So I'm expecting price to come back here. Now if you can see clearly, you see that price has never come back to this zone. Look at the last high it made, still very far away from this zone. So I'm expecting price to come back to this zone, all right, or this zone, either of them. So but I'm going to be putting it here. I'm expecting price to come back to this zone. All right, so when price comes back to this zone, I'm going to be taking my sell downward. So this is actually This is actually a mitigation block. All right, so this is going to serve as my entry. So when price comes back to this zone, I'm going to be taking my short. So this is over 90 pips. All right, and my stop loss is going to be slightly above this high here, which is around 33 pips thereabout. Still fine. I can make it 30, 35. Still okay. All right, so I'm expecting price to come back to this neckline of this mitigation block before I pull the trigger and sell this downward. So this is actually a high probability trade, and I'm going to be showing you when I enter the trade and how I was able to get out of the trade. This is actually a 1:2.8 risk to reward, which is a high probability trade. So if you're risking say $50, you're wishing to make at least $150 thereabout approximately. So guys, let's see how this goes. And this is the essence of scaling your trades downwards from a daily time frame where we saw the double top to a 4-hour time frame where we saw the bearish engulfing. We didn't see any confirmation on the 1 hour time frame how to scale down to 15 minutes time frame where we got our perfect entry. So we're going to be waiting for price to get to our zone. Don't be in a hurry. Wait for price to get to your zone and you pull the trigger. So that's what we'll be expecting, guys. And this is actually going to be my first trade for next week, and I'll be sharing the progress afterwards. See you guys. Thank you.